Well, good morning, traders and investors, and welcome back to another market recap right here on the weekend edition of Wealth Down with me, Norbert Menhart, where I build and protect wealth. And in today's episode, we're going to talk about the Magnificent Seventh, which traded sideways, up and down, and sideways the last week. So, trade faced a turn as investors rotated out of high-flying AI and tech names and into more value-oriented cyclical parts of the market, as we saw last week. The specter of less dovish Federal Reserve combined with mixed earnings report from the entire software and PC hardware space sparked a notable correction in the market. So today we're going to dive into a AI spending narrative shift. The major indexes run down, the major indexes, also gold and all of the commodities and cryptocurrencies. Then we're going to do not that of a deep dive, but we're going to check on the fundamental and technical analysis of some key market movers, some losers and winners from the last week. Also, we're going to do a couple of earnings reports like on Zoom Communications, Alibaba, Dell, HP, Autodesk, and Deere. And we're also going to take a look at what kind of companies will report earnings next week. And of course, at the end, we're going to go over my trades, stock and options trades, what I did there, how I thought about the trade, and maybe a couple of trade setups for the next week. So super interesting episode ahead. Like and subscribe the video if you're excited, and subscribe to the channel, of course. So I'm Norbert Menhart. I build and protect health, wealth right here at Wealth Down. Let's get started with today's video. And today we're going to, first of all, go over the broad market events, because the overreaching theme for the shortened Thanksgiving week impacted the market and was a shift in the market leaders there. So Nvidia gave back a lot, as you can see here, and Google gained a lot, as you see here. Also, AVGO, Broadcom jumped on that report that Google is planning their own chips and are mainly focusing on Broadcom designed and developed chips, actually designed by Google and developed by Broadcom. So this rose some concerns around the and also those concerns. I have a problem today. I'm retired. Sorry about this. So also those concerns about the Federal Reserve's rate cuts, which are pretty probable now in December, will happen, and that kind of give some fuel back to the markets, let's just say. Okay, so let's go over the indices. This was really interesting. Last week we had a green week. We're talking about the week from the 24th till the 28th of November. So 24th, green day, green day, green day, green day, and ending on the 28th of green day. Remember, we had one day closed on Thanksgiving. That was the 27th of November, but the market did end green on Friday on the 25th of November. The 28th of November, we are in 2025. So I'm sorry, today I do not have a good day. Sorry about that. So once more, S&P 500 ended at 6,849, which is pretty good. Not at all-time highs, but I think we're going to get there, even if we have next week a little bit of pullback in the markets, hitting that we have a major support with the 20-day moving average. Also taking a look at NASDAQ, which is up, ended in the green. The Dow Jones also ended in the green, and the Russell 2000 ended in the green. So everything beautifully ending in the green. From first with the S&P, first notable weekly decline that we had in last week, and then we came up this week beautifully. Also, the VIX finally calmed down. It went. You were watching me the last week. You saw that I was extremely concerned, but also said that after these two candles, I kind of thought that the cool down will begin. Now, we just cooled down massively, so we could see, exactly as we had here, a resurgence, upwards in the VIX. Don't panic, even if the first 2 weeks of December, which are mostly played by major sellers in the market. So what we're going to see is probably institutions rebalancing. So you're going to see a little bit of the continuation of the sell-off, but some of them will be bought back. Now, the US dollar just relaxed here a bit, so we could see this again tick up, then come down. So this may be a good setup for a dollar trade, I might say. Have to take a note about this. So, yep. First trade there is the dollar trade that I would recommend for next week. Now, let's jump into oil. Oil, where I do have a strangle on options on oil, came down, and I'm expecting that this is going to continue, but with the downturn, so with the bearish position here on oil. I do think this is still going downwards. Gold, on the other hand, had a beautiful day. I was already telling you right here when it hit the 20-day moving average, gold will resurge once more. Silver, on the other hand, Jesus. Silver just broke into new all-time highs just in 2 trading days. This had a, huh? And then it had a, whoa. Just exploded there. So only in one day, check this out. Only in one day, gold rose 5.65%. Incredible. So obviously the euro, the British pound, and the yen having its place around the dollar then. And crypto, Bitcoin went up. So it, as I predicted, it held here its support from the previous lows of April. Now I think that there will be a retest next week. So don't jump in right now into Bitcoin. Wait it to have its retest, and if it's going to do something like this, come down here, nearly touch it and go upwards. That's it. Bitcoin had its correction, and I do see that's a high probability take here. The same thing for Ethereum. So we're going to kind of wait for this. Whoops, what did I just draw there? Wait for, let me get the brush here. Wait for this to come down and then have its next leg up again. I don't think it's going to go only up, so it could do something like this, did last time, but be prepared to add some long-term positions to Ethereum and Bitcoin and all of your not all of your favorite. I mostly stay away from everything else. Maybe Solana, but not so bullish on that. I'm bullish on Bitcoin, bullish on Ethereum, and that's pretty much it. Okay, so let's just talk a little bit about the major themes influencing the stock markets right now. So we have the AI spending narrative shift. So what will happen if some financial magic happens there, and there cannot be the RECs are not 5 years, but are only 3 years where you can write them down in your books, or maybe only 1 year. So we have a little bit of a shift there. So the key catalyst for the tech sell-off was the report also that suggesting Meta platforms may use Google's chips that impacted Nvidia and the sentiment and so forth and so on. So the fear that the AI spending might be might be diversified, which is not bad. Everything goes to Nvidia, had Nvidia selling off, and then everything that was kind of mixed with Nvidia also sold off theirs. Also, Federal Reserve, geopolitical tensions, the upcoming inflation data, and lack of clear dovish signals from the Federal Reserve and their minutes kept a lid on enthusiasm, obviously. But also geopolitically, risk is out there and continues to shimmer, contributing to the flight to gold and so forth and so on. But if the war dispute will be resolved between Russia and Ukraine, then maybe we're going to see some changes in gold and some changes in oil. But I think that's kind of already baked into the price. The bigger concern is here the US dollar, I would say, most of all. That is regarding to gold, because people are just fleeing into more safer assets. Not more safer, what they think that they are more safer. Because let's just remember, gold does not produce anything. Okay, you buy it, you can transport your wealth in the next 10, 20 years, but it does not yield anything. So US treasuries are, in my opinion, safer, but for now they're sleeping there. So if you take a look at TLT, we're going nowhere. Well, maybe, just maybe, we are now on that bullish trend that will continue. So let's just see here. This is the pandemic, forget about this, but maybe we're again in something like this. And if we are, then brace yourselves, because we are heading for a recession. Not tomorrow, maybe not the next year. My prediction is 2028, where kind of this all AI spending is going to come to an end. People will demand some results from companies, and that is where we're going to re-see this again. Okay, so I don't say PLT is going to 170 because this was the pandemic. Money printing, that is. This up here was money printing, but down here happened. Down here, I think we're somewhere around here is 130, 140. So previous peaks will be reached. Let's just say that. That's just my evaluation of the current stance on the US bond market. Now, cyclical versus growth rotation, the outperformance of the Russell 2000 here. If I would overlap now let's just take the Russell. There we have it. The Russell, and I'm going to overlap this with the SPX or the SPY. Let's take a SPY. Okay, SPY is still above the Russell. Go to 1 year. Yeah, they kind of there, so it didn't outperform. Unless we're going to go to 6 months. And 6 months, yes, it did outperform. The Russell did outperform S&P 500. But just take a look at this. 1 month, we're clearly seeing that the S&P is starting to gain here momentum. So don't just discard now the S&P. Russell is clearly oversold. It's going to come down. On the monthlies, there is on the hour, that's hourly chart, okay. But on all times, so the last 5 years, you can still see we have our faith in the S&P. Also, on all time, the Russell is still the winner. Wow, that's kind of unexpected. Nevertheless, let's move on. I'm going to just take out here S&P, the SPY. Nevertheless, let's move on to sectors. We had some beautiful sector rotation the last week. So biggest winner of the last week, up with 8.45%, was basic material. Then second place came communication services with 7.64%, consumer cyclical 6.99%, and then we had in almost head-to-head industrials and financials. Then technology came in at, is this the 6th place, healthcare 7th place, real estate 8th place with 3.68%. So we're already at healthcare. We are at half the growth on the weeklies for basic material, and utilities came in almost, well, 3%-ish. Consumer defensive 2.75%, and energy 1.61%. But my biggest bet for next year and even 2027 is energy. I will go toes deep into energy, not just toes, but reverse. And you know what came out after toes. I'm going to go also that deep. Well, on the monthly, we still have healthcare outperforming here, technology underperforming, mostly with minus 6.4%, but healthcare is on the 3 months outperforming. Communication services 26 on a half year is outperforming, and on the yearly still communication services. That's being Google and Meta basically. Perfect. Now let's move on to a couple of earnings. We had some good earnings last week. I love this. So we're not going to do the deep dive. I'm going to dedicate special videos for, you know how I do. I take one company, we're going to do one video, concentrate on that company. But let's move on to earnings. So we had the following earnings that we're going to talk about: Zoom Communications, Alibaba, then we had Dell, HP, and Autodesk. Now, and also Deere and company. Now we had more than that, but these are the stocks I'm concentrating in. I'm going to do a couple of deep dives here. So let's start out with Zoom Communications. Reported the Q3 2026 earnings. Okay, so they kind of report strange earnings, but they did report it, as you can see on the date, 2025, and on the 24th of November. They reported on Monday. So pretty good report here. Had a couple of notes taken. So total revenue 1.23 billion, up 4.4% on the year. So where everybody thought the Zoom is dead, it's gone. It was just a thing of the pandemic. I think this stock is, boom, this is going to grow. This stock is going to grow, and I'm an investor in Zoom. Non-GAAP EPS 1.52, up 10%, beats the 0.8, so 8 cents. They expected 8 cents. Okay, a non-GAAP gross margin 80%, 170 beeps, and the Q4 revenue prediction is between 123 and 120, almost 24 billion, and that's a 4.1%. But that software outlook continue to signal that the digital growth is well and going. Couple of words here from management and the outlook. So management is successfully dividing margin expansion and strong free cash flow. They basically say that FCF margins at 50%, which is pretty good. The core video conferencing business is mature, but the platform strategy, so mature meaning they can't grow anymore, but the platform strategy is driven by Zoom Phone. And if you were following along, I already talked about this. They're giving out phone numbers, so you don't have to buy your own prepaid card. So the mafia is having problems with the throwaway phone, so they can buy Zoom phones. Check that one out. So past their phone Zoom business past 10 million paid seats. Wow. And AI companion 4 times adoption surge is going straight upward. That's pretty good, I'm impressed. Sector and macro theme for this company: the software maturity and the AI utility the market needs. See some Zoom shift from one's product pandemic. Basically, is the one trick pony, or can they deliver an enterprise platform play here from Zoom? So I'm really bullish on Zoom. Ticker symbol ZM. Let's take a look at their share price. So they're public since 2019, and they are currently down here. Don't despair. This is looking good. Check this out. This is looking really good. I really like this. Down here we have money flows. Okay, so money flows are growing. I like this so much. Check this out. This is an upward wedge. I'm loving it. I can clearly see this going forward into the future with maybe this was speculative, okay? So this 600 something, that's speculative. Forget about it. We are concentrating now on real world growth, okay? So let's see what happens with this company. I'm really bullish on it. I can see a doubling for this company easily in the next years. Okay, let's move on to Alibaba's reported earnings quarter. They reported on the 25th of November. Really good, really good, excepting one metric. So total revenue growth, 247 billion, but that's RMBs. That was a 15% growth, but GAAP net income sank 53%. That's a negative minus 53%. Okay. When numbers are in parentheses, that's negative actually. You can see here. Cloud, let's see, what else do I have? Cloud intelligence revenue 34% up year to year, and free cash flow is significant decline, 21.8 billion RMBs. Okay, so they have, let's see, the CEO Eddie Wu emphasizes the confidence in the AI capabilities and strategic importance of quick commerce. That is sorry if I'm not pronouncing this correctly, Taobao Group. That's a mouthful. And the message is clear. They are investing aggressively in capitalizing on the AI cloud opportunity and defend their commerce mode. So I'm not going to invest in Alibaba. Let's just be very clear here. Even if there are some bullish investors out there on Alibaba, nope, not for me. Not investing. I do have an investment in Baidu, which I'm kind of regretting. Maybe even not, but I feel they are the best competitor out there just because they have massive inflows from the state. So can't go wrong there, where you have the cheapest and almost better cars than Tesla, but the cheapest cars. So people are going to... Mexico is full with BYDs, by the way. Okay, so let's see. I'm not bullish on Alibaba. I'm just going to leave it here. As I said, I'm not going to do a deep dive on the report. Each of those reports will be linked in my Substack report for the weekend, which you're going to find down in the video description. There's a link for... In each video description, there's a link for each of my posts. Okay, let's move on now from Alibaba, and we're going to move to Dell. Dell Computers. What a performance. I was invested in Dell, but kind of sold them, and also not that interested for the moment. I do see that everything is now brightening out. So let's just talk about what they did there. So quarter three earnings 27 billion, up 11%. Non-GAAP diluted EPS 2.28. No, wait, this is the diluted for up 40. The non-diluted, the diluted was 2.59, so 70% up. So forget this. We need this one, the diluted, the 7% up. So yeah, the diluted EPS was up 2.28. For the $2.28 a share, up 49% year to year, but the non-GAAP diluted EPS was 2.59, up 17% year to year. Now, servers and networking, this is getting interesting. That revenue is up 37%. The startup, which starts to show driven growth in the server services and networking of the company, which is driven almost entirely by the AI servers. So take this with a grain of salt. This could change in a heartbeat. Okay, remember that when you're going to invest in Dell Computing. Okay, full year FY26 revenue guidance is for the full year they're going to grow 17%, 100 to 111.7 billion. Okay, massive rise, signaling strong confidence. Is this already priced into the stock? Maybe. Okay. Let's take a look at some management commentary. The management stated that AI momentum is accelerating. Nothing record AI servers orders of noting that they recorded AI server orders of 12.3 billion year to date. They successfully raised their yield full year revenue and EPS outlook significantly, as just mentioned. The Infrastructure Solution Group, ISG, is transforming the company, they say. So sector and macro theme here would be that AI hardware infrastructure, Dell, and that's the theme, that Dell has firmly established itself as a key beneficiary of the AI data center build-out, shifting the narrative from cyclical PC company to an AI infrastructure leader. Will this also be cyclical later on? I don't know. So my takeaway would be that fundamentally the massive backlog of AI server orders validates the long-term growth story here, but remember, it's always a question of the price of the stock. So the cash flow and the shares repurchase program remain robust. This is a secular growth story within the old school hardware firm. Now, technically, let's take a look at the stock. Dell, ticker symbol DELL. There we go. Has its sell-off hit the 200, went under the 200-day moving average, oversold here, looking to go upwards, has major resistance here, right here, on the cross, sorry. So there's major resistance here at the 100-day moving average. Above it, no, wait, the 20-day moving average is underneath the 100-day moving average, and above them is the 50-day moving average. It has massive resistance. It could chop around here, so let it do its retest, and then if it has a rebound, it's maybe a good opportunity to add some shares to the stock. I would only add it for a trade. So we had its 161% Fibonacci extension, and it failed there. Came down, is now having a retracement, so we have to recalibrate everything here. Okay, moving on from Dell to HP. HP also had its earnings not that good of a quarter here for HP, so total revenue 14.6 billion, up 4.0%, so 4% on the year. Non-GAAP EPS $0.93 a share. That's a negative 3% growth year to year. Personal systems PCs revenue 10.4 billion, that's up 8% for the year, and they're printing a 4.27 billion, and that's a negative 4% revenue. So I'm just going to say that this could be the next thing. So their price, HP. So the earnings weren't that great, but just take a look at the stock. Can you imagine why doing that? Because this will be the next one after Dell. Okay, they had a major sell-off, and if you want to add to HP right here, feel free to do so. I would wait for a retest, at least down here. This down here. Okay, so wait for a retest. That is retest itself somewhere around here. Maybe it's even going to have a sell-off, and then will be probably the opportunity to add some shares. Now I wouldn't go sell the farm on this, but I think this is good for a swing trade. Yep. Also take a look at the options prices. Maybe there's something there. Sell a couple of puts underneath the market. But would you like to be assigned Dell shares and keep them? Wow, this is selling off massively. Yep, wouldn't touch Dell. Just wouldn't touch it. Maybe a swing trade, but anything else than that, no thank you. Rather touch HP, sorry about that. Wouldn't touch HP. I would rather think about Dell if it has a pullback. Okay, moving on. We're going to take a look at one of the big ones out there, that's Autodesk. So they're basically major two companies in the world that, what does Autodesk do? We have it here in the presentation. They kind of deliver full stack services for planners. Okay, not just any kind of planning, not just structural planning, any kind of design of it's electrical, and also engineering, a lot of engineering design, so mechanical stuff, and they have Maya in there. So pretty cool software. And the another one is Nemetschek. Nemetschek is a European one. Autodesk is the US one. So they're basically the two companies out there. So it's a duopoly. Now, does this mean that the stock price is ripping? No, because it's hard. It's hard to... This is a subscription service, okay? And exactly as Adobe has its problems, Autodesk also has its problems, but we're going to come to the stock price just a little bit later. But they did report revenue 1.85 billion, up 18%. Non-GAAP EPS was $2.67 a share, up 6.9%. So pretty decent earnings there. Billings, why? Because they're a software as a service, a subscription service, as I said. So billings was 1.86 billion, up 21%. Boom, amazing. 21%, okay? So excellent leading indicator for our future revenue growth. Full year EPS guidance, and just think about it this way. If the infrastructure build is going to really kick in there, then you need software that is going to, you need planners and blah, 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 but you also need software, because I'm in the construction business, you also need the damn software to design those plans. And if more and more companies are going to mix around there, including Caterpillar, picks and shovels, Autodesk is picks and shovels, then yes, I see them having a really bright future in the upcoming years. So let's also take a look at commentary of the CEO, Andrew Anagnost, sorry if I'm mispronouncing his name, pointed to robust consumer adoption in architecture, engineering, construction, and manufacturing, especially from data center, just as I said, especially from data center and infrastructure projects. The strategic shift to cloud platforms and integration in AI were credited for the outperformance. As I said, the AI market is branching out because you have to implement everything, and especially if you implicate construction, then you implicate also the food service, the healthcare service. Everything will impact. AI will impact everything, and it will impact it also positively, not just negatively, because people are losing jobs and blah blah blah. Yes, they are also losing jobs. They also lost jobs to typing machine. And please answer me this question: when was the last time you took your horse to get new hoofs? Okay, so if you did not take your horse to get new hoofs, but you bought a software app for your car, then guess what? Some people lost their jobs. New people gained new jobs. Okay, that's just the way the cookie crumbles. Okay, sector and macro theme: infrastructure spending and design software AI integration. By the way, the stock ticker symbol is ADSK. Is a core player on the global infrastructure and construction benefiting from large public and private projections. So my stance on, let's also take a stock price, ADSK. My stance on Autodesk, it is in a bullish trend here since 22s, and I'm expecting this trend to continue with this beautiful sell-off right here. I would say is the perfect moment to add some long-term shares. Hold them, just invest $1,000 and you'll thank me in 3 years. Okay, or going to have its ups here and then it's done. No, previous highs were in 2021, and take a look at the last bull run. It was here. If I would do a Fibonacci extension, so from pretty much here, Fibonacci extension. Let's take the Fibonacci extension tool here to its lows, then this with not even at 61% extensions. So till it hits 61, plays around here, hits the 127, it would be my target where I would take some profits, not as the 61. So if you want to add to them, if you say, oh, it's over, I should add to them down here, well, you didn't, no problem. Add to this. If even from here you would only hit the 61 extension, just think about it. So kind of here, and let's say you're going to hit it next year. So let's say the next earnings, I think you're going to hit it. Maybe you will. So in February, you could already gain 14% on this. 14% on this stock. Wait for the next leg of extension. I will predict it's going to take a while. Let's just say 1 year. That's a almost doubling of the stock. Okay, and I think this could happen. So said that's duopoly, it's Autodesk and Nemetschek out there. Only the two of them. I already own some Nemetschek, and now I'm looking to buy some Autodesk. Okay, let's continue on here. Let's just skip this. For some Deere, check out Deere and Company reported some interesting earnings. So total revenue up 12.4 billion. That's 11%, massive beat on the top line. Diluted EPS, $3.89 a share. That's a negative 14%. Missed concessions on the bottom line due to high costs and tariffs, they say. Also, the equipment sales, 10%, 10 billion, 14% up. Strong volume and favorable price realizations. And the guidance is net income 5.5 billion to 6 billion next year, which would be kind of on the low side. So the probably going to lose 18%. So fundamentally, this company is a great company. They also have dividends. Let's go to DE here. This still could have a big sell-off because it already had such a major run here. Let the company do a little bit of sell-off. In the worst case, you're going to get 1.4% dividend per year, and let the company do its thing. If you have the shares, don't sell them. Just take a look down here. Take a look at this resistance level, this support level. Even if it comes down to the 440s, between 440s and 340s, buy the stock. buy the stock for the long term. Listen, this is one of the biggest companies out there for agriculture. Okay, so they're not going to go away. They already had some consolidation here. Maybe they're going to do another consolidation, and they are going to have a next leg up, especially with AI. Those machines will become so freaking productive in the future, you can't even imagine it. So my long-term prediction: buy the stock, hold your nose, buy the stock, and just enjoy the ride. If you want to be diversified, this is a pretty good diversifier here. Okay, let's take a look at next week earnings. We have a couple of just going to mention. So MongoDB on Monday after the close. Then we have CrowdStrike after the close. We have Salesforce. Okay, we also have GitLab. No, is this GitLab? Yes, this is GitLab, not GitHub. I'm using GitHub. So Tuesday we have CrowdStrike, we have GitLab. Then on Wednesday we have Salesforce, Snowflake, and UiPath. And I don't know why this is not showing, but I also believe, let me just check something. I think we also have Lulu. Lululemon should be up. Yep, there's Lulu. No, it's on the 11th of December. So we're starting the week with the 1st of December. Nope. It's on the 11th of December. Okay, so those are the companies that I'm watching for next week. And now we're going to jump to the next segment, which is my trades. So let's jump to trades. We're going to start off with some stock trades that I did, and then we're going to jump to options, the options trade part of this segment. So in 2025, we're currently up we're not up because it's not indicating my entire portfolio, but this is just what I made from trades, made and lost. So the sum of it, one is $19,772, and that is net because they're already. I live in Germany, so I already deduct taxes each time I make a sale. On options, I don't, but on stocks, because I use a different platform, and for options, I use Tasty. Link is down in the description. So for November, it was the 47th week, and now let's take a look what we did last week. So I made, it's here, I made on the 24th of November, right here, right after the market. I think, right after the market opened, because I should have held them for a little bit longer, but then they sold off, so blah, 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 blah. Google, Alphabet, A shares, symbol GOOGL on the 24th, and sold them for $403.99. That is a net of $344. The current conversion rate is 1.159 euro per dollar. And then I made also on the 24th, the German company, actually, no, it's a German company, French or German, look it out. But first, let's finish with Google. Finish with Google here. So on the 24th, let's take a 24th. Yeah, I missed one day. 24th. Yeah, actually, I did have the green day. Then it went up on the next day on the 25th, and then it came down. So I almost sold the top, I would say. But this is not the top. Google is going to go upwards, upwards, upwards. But just take a look here. So Mac currently massively overbought. A good enough correction is needed right here in Google. MACD is kind of weakening there. Maybe they're going to trigger a sell signal. Sell signal is not yet triggered, and I'm on the yearly. Yep, it's running up there. That was on the dailies, on 1 year, on 5 years, on the weeklies. It's massive. Stock just needs a correction. If you're thinking about adding to Google, even for the long time, just wait. Just wait a couple of days, weeks. I think that there's a rotation happening then in the market. Google is currently on the narrative that with Broadcom making the best chips. You saw Meta. They have different chips, okay? Their chips are designed for memory, and those from Nvidia are designed for other kind of tasks. So that is why the rotation is happening here. Okay, so that's it for Google. My Google trade, why I sold those shares. Yes, I sold all of my Google shares. For the long term, yes, I would buy them back later on, but not right now. Okay, not right now. I already had a good trade on Google. I'm investing in different things for the long term. Even if Berkshire Hathaway bought Google shares, good for them. I have a different plan. Okay, Siemens was my next trade. Energy, not technology. Okay, so energy. And the symbol is ENR. I sold this one also on the 24th and brought in a measly 32.3 euros, and that is a net of $27.52. So on stocks, I did this week, or last week, still this week, is on only the weekend, I did $371 net, okay, after taxes. So kind of missed the $500 mark once again. The entire November month was ish, but we're still up for November 2001, which means well, my target is $500 a week, and I got the $500, and that's net, okay? Netting $500 a week, and I did. If I would divide this $2,001.87 for the month of November, then I netted the $500 a week, even if I didn't made them each and every week, because the first week of November was really good, netting a $1,268 for that week, and then it went down, down, down. Second week we had $193 and then $168, and this last week only 2 trades, $371, because I went into Google, I saw the bullish moment there. Just use that moment, and if you're part of Substack group, then you're also going to get those trades. Okay, so we're closing the month of November with $2,001 netted, so that's after taxes. For stocks, now for options, let's go to the chain here. Let's start with what I was talking about the entire week, or for 2 weeks even. I did a vertical, called the vertical call spread, credit spread on Eli Lilly, and then Eli Lilly, so I sold it, check this out, on the 7th. And the 7th was here of November. The singular, not the singular, the first of two of 2 down days. So this is where I sold that, okay? That vertical credit spread. Then it went up. Then it stagnated and had a red day-ish, and then it went up again. And I was so far in the money because I sold the 980 with the 940 that it never came back. So it's currently sitting at $1,077, and I rolled it once. You see here, and I thought to myself that the second roll would then, I need the stock to come down here, okay, to the 900. The break even would be the 950, somewhere there, or 960s. In order for the stock to come back down to $960, the stock would have to have a massive correction, and it would, so each time you rolled for a debit, because it's impossible to roll for a credit, I'm reducing the amount that I can win. I could have rolled it until I was, let's say, 0 on the stock. Now the possibility of that happening, or the time it would have taken, and the money amount, I said that's enough, and I lost $3,200. That's it. Okay, next trade. OSCR Health, ticker symbol OSCR. For the last week, I did a 42 plus 22, a $64 return. Started out with an assignment on the stock from a previous call, put, sold the put, got assigned, then started selling calls against it, closed it, then closed it even with the call. So I also not only closed stock but also the call. I sold against it for a profit of $42. Then I opened a short position on it, sold a put, as you can see here, on the 24th, and closed it on the 26th, yielding $22. So in total, got myself $64 in 1 week on that trade. Moving on. I'm going to tell you the end of it, because we're currently negative 3,200 plus the 64, that's $3,146. And it's not going to end that good, believe me. Okay, next up, IBIT. This is the Bitcoin ETF. I have here calendar a leaps. I have leaps on this. You can see here, opened up on the 21st, sold a call against it, closed it for a loss, got myself negative $4. Then opened another one, closed it in a profit, sold another call against my shares, which I don't have because they're in the future, closed it for a profit of 18. And then at the end of the day, now this is not right, because this one is open, not closed, open position. So I'm positive, let's see here, $14 on IBIT. Moving on to Nvidia. Which is having a nice little correction here. And I'm using this correction because I have leaps also on this one, meaning I bought some shares in the future. Didn't buy them completely. I bought a call, and I'm selling calls against it. So as you can see here, I opened up on the 21st, one call, closed it on the 24th, bringing in $22. Opened another one on the 24th, closed it on the 25th, bringing in $88. Opened another one on the 24th, so this was a day trade, closed it the same day for $5 more. Then opened another one on the 25th, left it open till Friday, closed it for $24. So in sum, $139 for Nvidia profits there. Moving on to PLTR, which is Palantir, ticker symbol. Sold here a J Lizard, opened with a J actually, and close it then for $12. So open it on the 18th, close it on the 24th. I could have left this run, but I didn't because I'm afraid of the downtrend here. Is Palantir going to turn around? Maybe, but it's far too risky for me, so I just closed up the trade. Let's see how this will change with time. Currently, I want to see this retesting and then going upwards, and then we're going to open a new position into Palantir with long term. Next up, pick a symbol HIMS for the company HIMS and Hers. Sold the naked put, rolled it, and then close it on the 24th for $20. $20 on HIMS right there. Mwah! Beautiful setup now for another naked put down here, and the 33. Let's see, can we even find a nice position here on the monthly? 33, bringing in, if it goes to plan, $57 and only using up $330 as buying power. This is a nice trade. Woo! Nice one. But this would be for the entire month. But I think this is a nice trade. If you have the buying power, there's one trade for you. I would even risk going here. But let's just see how HIMS opens on Monday. Let's see what prices we're going to have here on HIMS. Okay, moving on to two more trades. ELF. Also on ELF, sold here a naked put, rolled it once, and then closed it for 18. Now, this is where I would say I would open up another naked put on this if it shows me that because the MACD just triggered buying, RSI is in the positive. So another naked put position here on ELF. Let's go to the options chain. Let's go to the monthly on the 20-day. And we can see that we could get some nice juicy, 10%. Just take a look at this. Getting, even more than that. Because the skew, nope. You know what? Just wait on how ELF opens on Monday. If it has a negative day, and this is going to change because the skew between buy and sell and the ask, so between the bid and the ask, is far too great. But if this holds up, so even if I get 89 and only risk the 697, not I risk actually more if you're selling a naked put, but requesting only $696. That's a pretty good trade. So definitely keep your eyes peeled for ELF. And the last trade that I did was on SPX, and yes, I sold a Iron Condor, and it was a day trade. Iron Condor, opened it up and closed it on the same day for a profit of $39 there. And that's pretty much it for my trades for last week. So hope you enjoyed this. Hope you got yourself some ideas. If you like this video, brought you any kind of value, please hit that like button. Also consider subscribing to the channel. I'm Norbert Menhart, and I build and protect wealth right here at Wealth Town. Have a lovely week. See you on Monday. Bye-bye.